This stock could make millionaires in 2026. It's one of the magnificent seven stocks. And a similar pattern that I have noticed amongst the big seven is every 1 to 2 years, you have one of them that's been underperforming. People call it dead. People call it trash. It's no good. It's not delivering returns. It's being disrupted by something. There's something wrong within the company. And once the company comes out of it, it delivers life-changing returns. And you don't need to look in foreign markets. You don't need to look at small and micro caps over the last few years like I did. If you bought Meta, whenever people said it was getting disrupted, you made life-changing returns. If you bought Google this year, when people said that ChatGPT was killing Google, well, it has done really, really well. I believe there's another one that's likely going to do extremely well in 2026. I see the same setup, the same scenario. So I'm very excited to talk about it and give you my thesis. The stock is Amazon. Amazon is up 5% year to date. Amazon owns a lot of businesses. It's not just Amazon Web Services, and it's not just the advertising business, and it's not just Amazon Logistics. And I always focus on talking about the biggest businesses in Amazon. But in this one, I'm going to take a different approach, and I'm going to talk about some of the businesses that Amazon owns that maybe you don't even know that Amazon is actually invested in those businesses. And this is my favorite part about personally owning Amazon, is that I would call it a mega cap startup, where it kind of behaves like a startup or a venture capital conglomerate, you could say, where the company is not doing buybacks, they're not doing dividends, they keep reinvesting in themselves, they reinvest in logistics, reinvest in the chips and Amazon Web Services, but they also invest in a lot of early stage and newer businesses. And if they work out within Amazon, kind of like AWS, AWS was a moonshot. No one expected AWS to be so large within the Amazon company, but it was a success. There's other businesses that went to zero, but they were a tiny percentage of the capex, so it didn't really affect them too much. So if they're right on their investment, they could make a lot of money, but if they're wrong, they don't lose too much. And I'm going to talk about those businesses today and then talk about the valuation. Now, one business that Amazon owns that no one really talks about is Zox, or Zoox, I think it's called. I'm not really sure how you pronounce it, but it's a robo-taxi. Everyone talks about Waymo, everyone talks about Tesla being disruptors, and they put a premium on them because of the robo-taxi and, all these kind of autonomous potential. But no one talks about Amazon's potential within Zox. Zox already has services in Las Vegas. They've been doing rides in Las Vegas for a long time. And now they are expanding in San Francisco, offering free rides through parts of the city as it accelerates its attempt to challenge Waymo's early lead in the race to transport passengers in self-driving vehicles. Now, Waymo is charging passengers. I believe they don't charge them too much. Amazon can afford to do it for free, and they own 100% of Zox. Waymo is not 100% owned by Google. Amazon owns 100% of Zox, and they're going to be doing it for free to start attracting market share. They also bought another facility. They want to produce, I believe, 10,000 vehicles annually of those robo-taxis, and they want to deploy them and start taking it commercially in other markets. But no one's talking about it. Everyone talks about Waymo and Tesla. Yes, maybe Amazon is a little bit late in this area, but that's another business where if it works out, the TAM over here is huge. Or if they decide to spin it off, it could trade at a major premium on its own as a company. Another business that people don't know that Amazon owns is Amazon Leo. Amazon Leo is the closest thing to Starlink you could get. Maybe it's a little bit later because the company is not making revenues yet. They're going to be launching it commercially in 2026, but they've been launching a lot of satellites. They have 150 satellites in orbit, and they are launching a new preview program for select enterprise customers to begin testing Amazon Leo services ahead of a wider commercial rollout next year. And if that was a success and they start to challenge Starlink on a lot of their pricing, because Amazon will be much more profitable than SpaceX ever will be, or Starlink, or whatever the business is, and they can afford to do it at a lower price, undercut those companies, and disrupt Starlink and disrupt many different players in the space. And this is a major bet on space, and it's a major bet on a recurring revenue model. And if it was a success, it would be amazing. And again, no one's talking about it. Another business that no one's talking about is Amazon delivery, mainly Amazon Fresh. But Amazon is offering to deliver is within 30 minutes in parts of Seattle and Philadelphia. This is something that Amazon is doing outside the United States, and other companies do it outside the United States. But inside of the United States, they're trying to bring in 30 minutes delivery. Now, that may not seem like a big deal, but for household essentials and fresh groceries, this is huge, guys. If you think about it, why do you go to Walmart? Why do you go to Target? Why do you go to Dollar Tree or Dollar General or to the convenience store? Because you need something quickly. You don't want to wait a day for Amazon to deliver it to you. But if you could sit in the comfort of your house and someone can get deliver it to you in 30 minutes or an hour, would you really be going on Instacart to order something from Instacart? Or maybe Uber Eats to order something that could bring it to you from the store when Amazon can bring it to you in 30 minutes or an hour? So this disruption here for Amazon, maybe for Costco, maybe for a lot of those players, is huge, guys. And again, I don't think it's being appreciated enough. Another business that's not appreciated enough that I talk about often is the robotics business of Amazon. It's one of the largest robotic tech companies in the world, I believe. The company has announced its largest layoff in the company's history. I believe the total layoff was about 30,000. It's actually about 30,000 workers. And that's a lot of workers, but this is what's happening within the Amazon robotics business. It's causing more and more efficiency within the company. And this is why the company's net profit margins, or I should say operating margins, have exploded from 0.2% to 11%. This is a post of mine that went viral on X, and a lot of people posted it, even from the All In podcast. They reposted the tweet and they talked about the Amazon's robotics business. And it's huge, guys, but it's not being priced in the company as a current valuation. You have another business of Amazon, which is Amazon Web Services. It's recently started to reaccelerate in growth from 16% to 17%. Now it's at 20% revenue growth for Amazon Web Services. And I think it's going to extend further to 21, 23, 25, maybe potentially 27%, because it has a lot of recent catalysts behind it. One of it is Project Rainer, which recently came online, is going to be using 500,000 of the Trainium 2 chips, which is an Amazon chips. Then this is another business again, and they're rolling on Trainium 3, I believe, in 2026. They also signed a partnership with OpenAI, $38 billion partnership, and now it's an AWS customer, and the company is firing on all cylinders. But you look at the stock, you believe, oh, the stock is only up 5% on the year or 2% over the last year. So the company is doing nothing. But if you look at the fundamentals, the expansion that the company is putting up, and a lot of the improvements within the company on a lot of efficiencies and robotics, and the launch of next year in terms of 30 minutes delivery, how that's going to disrupt Costco, is going to disrupt Walmart, and the satellite kind of businesses, and so many businesses, and Zox, it's insane. And it's only up 2%. So the setup here is really amazing. But if I look at the valuation, Amazon is trading at 14 times price to operating cash flow, which I believe is cheap, and is growing operating cash flow 23% this year, expected to grow 26% next year, and 21% in 2027. So I'm paying less than 1 times cash from operations growth for Amazon. And if I look at Amazon and I look at all the businesses they own, and if I had to value them on an individual basis, I believe they will likely be worth much more than the company. I'm not doing that because I believe in the conglomerate discount, that it will always be at a discount because all of them are within Amazon. But I believe someday Amazon will likely spin off some of those businesses once they become a little bit more valuable and unlike value for shareholders. But regardless, I still believe Amazon is undervalued. I see a Meta or a Google-like setup in 2026, 20 to 50% returns. I would not be surprised at all if Amazon maybe grows 20% in operating cash flow and the multiple expansion goes from 14 to 16, 17, even 16, 17, which where it was a few months ago, I would not say that that's overvalued for Amazon. So the setup here is amazing and I like it very much. And that was my opinion on Amazon. It was not financial advice, so I hope you enjoyed it. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.